So in this video, I break down a real back test example using market structure, supply and demand, and pure price action, showing exactly why I took the trade, why it made sense, where I took profits, and how I managed my risk. So if we go into the charts here, we're looking at EuroCAD for November of 2024 here. This was the trade. Now, of course, it didn't hit take profit. It eventually did, but I was already out of the trade at that time, and I'll show you what I mean. Just giving you the context here on the 15-minute. What we'll do is we'll rewind back to about at the open, let's say 9:30 open. So here we go. So I'm going to confirm this. I'm going to take this off the board. So, okay, so with 9:30 opens, we're going to drop down to the 5-minute here just to see a little bit more clarity. We're bullish on the 15-minute, right? We've gone bullish since the pre-market trading. We do have a interesting order point of interest here as far as a demand zone. So I would automatically, mark this up, looking at the fair value gap there, and I would identify this as my demand zone. The reason is because we do get an accumulation, we get some manipulation, and then the move up that leaves a fair value gap. That to me is a clear sign of a valid demand zone. It also helps take out this previous high here. So another confluence to suggest that there are some orders here that we can jump in on. So with that setup in mind, we don't have any key news events, red folder events in the immediate future, which is good. So we'll just advance this forward. We see a drop down in price at the open, and we start to get a pullback up. Now at this point, it's very key to see how price behaves. We start moving back towards our area of interest, which is great. We have some buyers stepping in, so it's better to see this versus just a steep, knife cut down into our zone. That's definitely not what we want to see here on the 5-minute. We get a little bit of buyer action again. We get a big push of buyer activity here, and now this creates a low right here. And what we want to do is be mindful of this and see what kind of role it plays. What happens is that price continues up, but then cuts back down. And once it passes, it cuts back down, and what happens is that this now becomes a weak low. The reason it's a weak low is because it failed. This becomes a weak low because it failed to take out this high. And now we assume that this will get taken as liquidity, right? So we just are, and that actually works in our favor because that liquidity sits right above our point of interest. So all the more reason to believe that price will come back into our zone. And we play that out. It's a little before noon now that we see that price has tagged in. And one thing I forgot to mention is that at this point, since I'm looking for that low to get taken, I'd expand my zone to capture it. So I don't want to miss anything. I don't want to be too refined here and expect price to follow everything I want it to do. We don't control price. But what we can do is react to what's given. And since we identified this as a weak low, we know price will get to at least that point. We want to set our zone accordingly. And so now we'll just rewind back a few candles at the entry of this trade, a little bit before 12 o'clock. So it's in that lunch hour zone. You want to be mindful of that. But what I found in my testing is that it really doesn't matter. So it's a matter of preference. And so this is the activity that's created that move down. Again, same principles. Since time frames are fractal, we're identifying this small zone here on the 1-minute as our supply zone that created this move down. We see there's a short accumulation, manipulation up, and then the aggressive move down that leaves fair value gaps. What we need to see price do is clear this high of the zone. And once we have that, and let me just carry the box over so it's super clear. Once we have that, we know that buyers have stepped in and are pushing price higher, and we can look for an entry at that point. So until then, we don't do anything. We observe price continues moving up, showing good momentum to the upside. We don't see many down candles. Now, of course, as price enters this supply zone, we do expect sellers to step in, which they do, right? And we get a big push down, which is something to see. And so price continues pushing down, but we get one big engulfing candle here on the bullish side. And so this is a first signal that something might be happening and turning. Sellers step in again. This is the fight now that we want to stay out of. We don't want to get chopped up in here. There's signals that it could be going further down. Right there, you see it, a push down. Keep going, keep going. Buyers step back in, sellers come in. We're not doing anything at this point until we get a break above this candle, which we start teasing a little after 12:30. Can't seem to quite do it. Still, sellers are defending this, and now it's a matter of who's going to get exhausted first. Sellers are pushing in, but you can see that by the size of the candles, it's not very convincing pressure here. We get a nice big candle on buys, but again, sellers come back, push back. They continue to push back. And eventually, we get the break. Okay, we get the break here a little bit before 1 o'clock Eastern on our trade. And so now that we have invalidated and exhausted, presumably, the sellers here, we can look for an entry. So we want to clear things up. What I like to do is at this point, go to a 5-minute chart to see if there's any clear kind of points of entry. Nothing so much here, so I'll stick to the 1 minute. And when we have this kind of activity, I like to get in sooner than later. And so we can identify this as our low, since this is now the 1 minute demand zone that broke the structure immediately. I like to play a little safer and just kind of capture this zone here. If we break below this candle, we would have exhausted all the buyers in this area, and if it's going to continue further, it's gonna break. So what I would do is probably just take the candle low of this zone here. Okay, because presumably what's happened is price has pushed up, tapped back in to gain more buyers, and then made our key move up. And we're prioritizing the last move up for our entry. So that is my entry. If we zoom back to a 5-minute, we can see what this kind of looks like relative to all the price action of the day. We can see that we have one PT here, right? We have one high here that can easily be taken. We have another high all the way up here. And so at this point, this is probably what I would target. A 4.84 is plenty for me. So that's what I would target as my final take profit, but we do have an area to take partials. Okay, so at this point, we would we'd set our trade for 1% and we would carry on. So now on the 5-minute, we'll check in. Price actually taps into our first PT, but that doesn't change anything for me necessarily. What I want to see is I want to observe price action coming out of that area because it's a PT, because it's a high. So we want to see if sellers are defending this zone with aggression, we might want to take our trade off. So what happens is we liquidate, we have small buying pressure, but we do pass it clearly, but we're not tagged in. So this candle is aggressive. So this would give us some pause. Maybe sellers are coming in aggressively. But these candles, you see how buyers are stepping in ever so slightly. This is enough to slow them down to prevent a complete collapse and hit of my stop loss. So I like seeing this. Don't get me wrong, it's a little nerve-wracking seeing that kind of activity, but we tag just in. We tag right in with this kind of staggered approach on the 1 minute. And now we put wait. We can move our take profit from that location to this one, since this is the new high that we're trying to take. And we play things out. We see how things are going. We see that price is, at this point, I'm not following the charts aggressively since I have my intention of hitting my PT1, which I do now. And so I typically take 50% off at this point and have moved my stops to break even. And now it's a matter of just kind of seeing how we play out. We want to see, we've already taken all the risk off the table. We've taken profits at a logical area, and we just want to see how price goes. We make a move up, continue to push up. You notice that we don't close above this high here. Just want to zoom in. We don't close above this high. If we did, I would have moved my stop loss into the profit zone. But since we failed to do that, it suggests that now this low is weak for the same reasons we talked about earlier on the entry. And so the fact that we're at break even makes sense, because if it's going to come here, we want to make sure to get out at least at break even. If you want to be aggressive, you can kind of put your stop loss here below this fair value gap, because if this fair value gap fails, it's certainly going to come and hit this weak low we've identified. In any case, for the purposes of this video, I'm just going to leave it as is. We see some buyers step back in with a nice engulfing candle. That's positive. They continue pushing in, but sellers continue to outweigh. And now this is a low we're looking to take. Buyers step in again. It's very back and forth here. And we're approaching the close of day, but before we even get there, we get taken out at break even. So we come out with 0.5 R and a break even. Now, of course, we didn't get to take profit, which is fine. We're managing the trade and we're coming away with profits whenever we can. So I think this is a positive trade, even though we don't get full take profit. The important thing is understanding supply and demand zones, the good versus the bad, as well as price action for entry. I hope this helped. If you enjoyed this video, check out my other ones that I have of this and my back testing, and I will see you in the next one.